Easter.
Cool.
So now let's move to
the
stock of the week.
So this is more or less stock of the year. Kind of. Because this is the last episode 17 of this year.
Of the year.
We decided to go with NSE 20 index.
Absolutely.
Yeah. So
to give a reflection and an overview of how the whole market, because NSE 20 reflects the whole.
It's like a summary.
Absolutely.
Yeah. So there's like a share index is like a benchmark of that shows you how a stock market has been performing over time, because it takes for the let me speak for the with regard to the NSE 20. So it looks at the 20 most performing stocks in the NSE and then does an weighted average on them. Yeah. And then now that's the price. At which the stock market, the NSE trades at.
Absolutely. And interestingly, for the NSE 20, one of the requirements is that a company must have at least 20% of its stake listed at the bourse.
Why that figure?
Oh, today 20 has come up a lot with MTN Uganda. This, I think this is just a requirement by the NSE, so that there is a substantial amount of that company that is listed at the bourse, so that it's really a reflection of that company what is listed
it's
there.
Actually representative.
Yeah, because if you have 1% listed there, so that might not be a whole, of course, not a whole representation of what's happening there, but 20 is quite significant.
Yeah, sure.
Yeah, so I mean, last year in 2020, around August, NSE revised. This is done on a yearly basis.
Yeah.
So
it's yearly.
Yeah, it's yearly, but sometimes
like the period is shorter,
sometimes it might be overlooked, if there are no rapid changes in the market. Because an interesting thing that happened last year for NSE 20 and 25 is KQ was kicked out of that place.
KQ,
and
what is this other company?
Jubilee was brought in to replace it in the NSE 25, and Stanbic was brought in to replace it in the NSE 20.
Yeah.
So KQ aliambiwa pole tafadhali, get out.
Honestly, they were expecting it out. Anyway,
they were one of the top performing.
So we have a lot of indices. We have
NSE all.
Yeah, now let's go with the NSE ones. Yeah, we have the FTSE. We have other exchange traded funds, but those are different.
Yeah,
let's focus on these three. That is the NSE 20, NSE 25,
and NSE all.
NSE all.
Which now NSE all, as it says, all the companies.
All companies. Yeah. So the NSE 20 trades at 1856 shillings. That's a lot. Anyway, the 25 goes for even higher, 3,594.
As expected.
Why is that expected? You'll tell us that later. And then
you've already kicked out the bad stocks. who are in the NSE all. When you go to NSE 25 and NSE 20,
the NSE all now, where the bad stocks dilute, is now trading at 162.77. So now Abu try explain why that variance in price.
The variance in price for me easily speaks to
the quality of
the stocks, because if you look at NSE in Kenya, you find that of course the NSE 20 are the topmost performing, so that's where we have Safaricom, we have the big banks, we have Equity,
topmost performing, we have Simba. Or the biggest? Is the biggest?
I must mention KCB first. You have Simba, KCB there.
Are those guys paying you? Are they paying you?
I can neither confirm nor deny.
For your safety.
But no. Okay. I've just been a big customer of them.
Cool.
So now you find that the big banks and Safaricom, who are really the one of the biggest when it comes to where investors have put in their wealth at the bourse, you find that it's there. They've been performing well. The banks have really performed well, especially looking at this year coming back from COVID. This episode, we started our episode 1 with the half year results of the banks, and we've seen growth. We've seen also growth, with the Q3 results, and as expected in the year results. Yeah, so banks have been doing very well. Safaricom as well, moving into Ethiopia and the market, the way it received that, and the price went up to around 45. So that really played well with the NSE 20 for the year. But then
Safaricom is at 38.
Yeah, we've seen challenges with that.
Go to 35. I was where?
It's now up to 38.
It's 38. Last time I checked, it was 38.
Yeah, I think it will stay there for a while, but we'll see. The market is the market.
Getting into inflation.
So that has a big impact, of course, in NSE 20 and 25. Safaricom and the big banks. We also have BAT, that normally, as we normally like saying, 80% dividend payment. So it's also in the NSE 20.
Yeah.
So that's BAT is a solid company, as we discussed, the must stock of the week. Go and check that out. We've already discussed BAT.
Yep.
So those are the companies that are there. EABL, which
it's a number of companies.
Absolutely.
I mean, you can't.
And
mention the 20 companies,
the stocks are they're pretty solid stocks. I mean, ABSA, BAT, EABL. So
I mean, the qualifying factor is you have to be good.
Absolutely
to be there.
No, if Easter. So let me just ask you: when you look at the year 2021 as you're coming to a close, how has NSE 20? What has been the ups and downs?
Not so good. That's
where are we sitting currently?
When you mention the prices I mentioned or the current prices. Yeah.
So I mean, in as far as the year has been with the curve and everything, where are we sitting right now?
Not so good. Since I don't know what I was checking the chart yesterday, and for the NSE 20, since September to date, it's been on a downward trend. It's been bearish the whole time.
Why do you think
constantly? Then I go and check the S&P 500 that's now in the NYSE.
The Standard & Poor's.
Yeah. It's been growing throughout, which is what a stock index should be. That's
not necessarily. When there's a hit, chief. But S&P is different.
So what is this that is hitting us? That's not hitting a bigger or a more mature market like the NYSE.
Okay, so just to track this well, so we are recovering from COVID, and we're also having Omicron variant and everything. So
COVID that's only hit Kenya.
No.
Yeah.
Now I'm looking at the NSE 20.
Okay.
So if you look at the curve, you're saying that since the beginning of the year, the curve has been going up.
Down.
Has been going down.
Down. You're talking about the NSE 20?
Yeah, the NSE 20.
Down.
So it's been going down.
Yeah.
So I think...
Okay, on average.
So the peak has been on average. But then it had been rising. The peak was in September. 2021. So the peak was in September, then it started coming down.
Well, you see how the stock market moves is that it has a new low and a new high every other day. So,
of course.
So it moves. Okay, now this will be difficult because now we don't have graphs. So I'll have to
no problem.
So generally it's moving down, right? Hapa katikati, there are those figures that you call, if you now start looking at fundamental.
But the peak of the year has been in September.
No. There's been a higher peak before.
When was that?
I'll have to confirm that. Like from my check, from what I'm seeing here, even in October it was higher than what it was in September.
Okay.
Yeah, so you have to go and check the actual figures.
No, I'm actually looking
at
the NSE app, and it's September.
The highest it's ever been.
No, for the year.
Okay.
Yeah, I'm talking for the year.
Okay.
No, come on, Easter.
A good drive.
Yeah, so I mean, since that's what I was referring to. Sorry, I was talking about 2021 particularly.
Okay.
So if you look at the beginning of the year, it's been rising. It hit September. That has been the highest.
And what happened
then
in September?
It came down.
What's this that happens?
Absolutely. Now that's what we've been trying to find.
Yeah.
I'm trying to look at because I think it's an effect of. Number one, I love to point out the bankers. Because when half-year results came out, this is in August and a bit of early September. So their stocks really went up. I remember we were talking about equity, we were talking about Simba KCB, ABSA, NCB, we were discussing them.
Yeah.
We had just started the podcast in August. And we saw that when they released their half-year results, we look at 100% PAT increase, and the stocks really responded well.
Yeah.
So you'd find that, because of the banks, the way they've dominated the NSE 20, so that
the general trend
went up.
Was bullish.
Then it went down.
Yeah.
Okay?
Yeah.
And now
which is quite interesting.
Absolutely.
Because it's a very drastic drop.
Yeah.
So I'm interested in knowing what is this that happened. Is it early September?
Now in September, when it went down, I think it was simply for me a market correction. It was a correction of the banks. Now when they announced their profits, so it went up, the market reacted to that, but then it was just an announcement of profits. So it again went down. So there was that correction bit, so to speak. Now when that went down, and since the banks, have really dominated the NSE 20, so the NSE 20, so for me, I'm putting it on the banks.
Okay.
Yeah,
And the market correction.
absolutely.
Okay, let's go with that. Let's roll with that for now. Our viewers can kindly feel free to let us know what you think.
Well, what do you think about that?
Yeah.
Do you put it on the banks as well? Do you think it's Safaricom or EABL or who? What do you think? I'm putting it on the banks here.
I have to go with Kigan. Yeah.
Great. So, I mean, what's your outlook for next year in as far as the NSE 20 is concerned? What do you think of it?
Just before I go there.
Okay.
Oh, now that you've asked it, let me just answer.
No problem.
I don't think I expect it to be generally to have a bearish element.
Remember, it's an
bearish.
electioneering.
Exactly, which is why I'm like, it generally it will be bearish. Yeah, and I'm not saying with a lot of authority that it will be bearish because
the market is the market.
Yeah, exactly. You can be like this. Hopefully next year we'll have the most peaceful election we've ever had.
Yeah, we really hope so, and I know we will.
Yeah, you're very faithful. You're strong in faith.
Yeah, I love this country.
I don't know what that says about me.
I mean, we've constantly have discussions on this podcast about how you and Mr. Daniel Kalia are really not patriotic. And I expect better of you guys come 2022.
I think I love myself more than I love a country. Yeah.
Anyway, let's just get back to that.
So next year when we might have the prospects look like we might have a very peaceful electioneering period, and so if that happens, that might reverse everything, projections and anticipations of bearish market.
But still, that fear in mind is gonna have an impact.
Sure. But then it will be like minimal.
Absolutely.
Yeah, and if again the market corrects itself, if we have a peaceful election, right after you cast your vote, right after the elections are done, you'll see the market correcting itself.
I think it's not right after you voted. I think it's after.
No, not.
I think
it's not that
after,
dramatic. Kigan,
it's
that
after.
when you
then hey, you look at the NSE app. Of course, it will be after. I think the stability will be confirmed with particularly with the presidential elections, once the results are announced, once we even have the new president being inaugurated, and those who participated in the presidential elections, also accepting, the results and everything, and there's not much contestation. Yeah.
And honestly,
so I think that would affirm it.
When I'm looking at it now, it would next year it should be slightly bearish. Slightly bearish. Electioneering periods, it's steeply bearish. It's been steeply bearish from history. But this year, I think it will be slightly bearish. Because again, that expectation, that anticipation of war, of lack of instability.
Insecurity.
Lack of stability, that is insecurity and all that. It's enough to create a movement in the market. But because it won't happen, at least what I believe, that it won't happen, it won't be actualized. The end result will be minimal.
Normally it's usually the expectation of things that normally affects it, because if you look at also derivatives in the US, the fact that a shortage is anticipated. So that anticipation and not the actual shortage is what causes the market to react.
Just remember that happens for inflation as well. Remember in Zimbabwe, when the price of something increased, people anticipated that it would increase further in the next day, and so they started selling it at
so
a higher
that anticipation
price.
of increase already causes another increase. Makes a lot of sense.
So it gets to the morning, then the price does not increase. Now you have to lower it. Now you're reversing, right? So
the market is the biggest game and by far the most brutal. You have to go in with a thick skin. For me, my outlook is I'm seeing that at the early parts of next year, we might have a little bit of we might see a bull run. Not that much of a bull run, just a slight increase.
Why?
I'm putting this also on the banks. When the banks announce their full year results, of course you're gonna see growth. We've seen that in Q3 and of course in the half year. So I think that the market might react to that well. Safaricom ends its financial year in March. They'll announce their results. We've seen that, but there's no company that investors have put in their wealth at the bounce more than Safaricom. So that might have a huge impact on NSE 20 when they release their results. So that there will definitely be an increase. As we go down into April, we finalize the primaries in the parties, going on into June, July, now August into the elections. There'll definitely be a dip. If we don't have a contestation of the presidential elections by any of the presidential candidates going to the Supreme Court, I think the recovery might be sooner than expected. I think it will be solely dependent on moving to the Supreme Court, because when you go to the Supreme Court, is that the country is hanging for a while.
Sure.
Because the Supreme Court
everyone is waiting for
so things are suspended. Also, the market tends to be what might come out of this. So I think that might be dependent on it, but I'm really hoping for a peaceful election. So that's my outlook.
That reminds me, the reason as to why we see in electioneering periods, guys, the stock market taking a hit and registering very drastic bearish elements or movement is because the chunk of the investors, 70% are institutional or
are international.
Largely
institutional.
These are people who they hear an election and they look at history to make decisions. And the history is not that good. They fly out.
Absolutely.
Or they fly out with their capital.
We have to understand that these are not people who live in Kenya. Okay, so they live on what's in the news and everything.
Exactly. So they call the money. And so suddenly Safaricom is being sold. The supply outweighs the demand. And that's how it dips.
And also to our investors, as Easter likes to say, our investors, next year would definitely be a good time to buy. There will be money to be made next year at the bow, so watch out for that.
Sure. There's this person who says, a very famous person who says, when people are greedy, be conservative. I think it's the guy, the
Berkshire. Charlie Munger's investment brother.
Warren Buffett.
How can you forget his name?
I've gotten to this point where I can remember the company, but I can't remember the name.
Legacy.
Legacy is the word. So he says, when people are greedy, when the market is greedy, be conservative. When the market is conservative, be greedy. Buy. So next year, as to concur with Keegan, buy. Next year is a good chance to buy. But what are we giving them now? Should they wait till next year to buy, or should they? What are you telling them?
It obviously would depend on on which particular stock you'll be looking at. I've actually seen that car in general went up by 7% after we talked about it.
What are you trying to say?
We are an authority. We are Kenya's market map. We map the market for you. So all of us, the three of us, Easter, Kalia, and I give it a buy recommendation, and it's up by 7%. Give it a buy recommendation. It's up by 7%. Oh, great stuff! So we've come to the end of our.
Maybe let me just ask you something. You look at the composition of the NSE 20 or these indices. No, let's look at the NSE 20.
Okay.
The qualifying factor is you have to be 20 of the biggest
well performing stocks. Not necessarily the biggest.
Is that what's the difference? Is it the best performing or the biggest?
Okay,
I think it's the biggest. I think it's the biggest.
All right.
And so do you think they should look at not just size but also performance in terms of not even performance, industry? They should be particular about, from this sector, the banking sector, you're looking at the best performing stocks. 20 or X number of best performing stocks. From this industry,
it's actually best performing,
not biggest.
The Nairobi Securities Exchange 20 share index, NSE 20, is a major stock market index which tracks the performance of 20 best performing companies listed on the Nairobi Securities Exchange. They're selected based on the weighted market performance for a 12-month period, based on a market capitalization number of shares traded, number of deals, and turnover. The NSE 20 is also a major stock market index which tracks the performance of the large companies based in Kenya, as we've talked about. Because the large companies happen to be the best performing, EABL, and Safaricom.
But do you think it's time? Okay, do you think it's even necessary to categorize these stocks into industries? Like, you're looking at the banking sector, they're going to pick 3.
So we have an industry-based index.
No.
And then we have Safaricom, lonely stock, in general, lonely stock.
Industry-based index.
So for the banking, you'd have an index for that.
Yeah.
Insurance for that.
Yeah. Would that help?
I think it would be interesting to see that, actually. Jeff Odundo, I hope you're listening.
Yeah.
You might want to do that.
So you have an index.
So that would give you an industry outlook
of the banking sector.
Yeah, because the time we were talking about Jubilee Insurance, Jubilee Group, Jubilee Group, when we're talking about that, and of course, as we normally do in every stock of the week that we discuss, we normally do an industry outlook. So when it came to Jubilee Group, we have an industry outlook of the insurance. So I think that would have been important, and helpful to try
just
and
go
track.
Look at the index of that industry.
Yeah.
Then now after you have another index that now
I think
is
that should be available if it's not available.
I don't think it's available. For us to know how the banking sector works or is performing, we wait for them to announce the results. That's sustainable.
Yeah.
Anyway, so that's been it.
It's been it. Episode number 17
for the year.
Thank you so much for being with us. I'm looking at the clock. It's 10 minutes past past the hour mark. Thank you so much. As we've said, this is the last episode of 2021. Great stuff coming up in 2022. You are not ready for this. You are not ready for this. I've been your co-host, Keegan Kiplimo.
And I've been Easter Fanning, Abongo.
And as always, it's nothing personal.
It's
just business. Cheers, guys.
Bye.
Happy holidays.